business plan and strategy was, does this stuff work? And I was like, well, I'm going to buy a rental property and just see if I can actually get somebody to pay me for owning a piece of property. And I live in Little Rock, Arkansas, and so it's a very low cost market. So, and this was the year 2015. So the market was at a good place. And I was able to buy a 3-bedroom, 1-bath property for $30,000. It needed $10,000 worth of rehab to get it back into rentable condition, and I was able to refinance that. The value at the time was $55,000, so I pulled about $44,000 back out. Was able to pay back my initial private lender, pay back the money I put into it to fix it up, and was cash flowing, about $100 a month after you factor in all the expenses and allocations and everything. And that didn't really change my life.
Welcome to the Real Estate Hustlers Podcast, where we have interviews with real estate investors and entrepreneurs about successes, failures, and hard-earned lessons. Through in-depth conversations, one-on-one listener coaching calls, and news analysis, you'll get a breakdown of real strategies that work for different niches and experience levels. Tune in to the #1 real estate investing podcast every week to stay in the know. Now, here is your host, Josh Appleman.
All right. Welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Capital. Today, we're joined with Paul Thompson. Paul guides professionals to financial freedom with his Wake Up Call program, transforming constraints into opportunities for growth. Paul, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Sure thing. Thanks for having me. I was a corporate drone at one point. Spent 15 years in the corporate world before I realized that my ladder was against the wrong wall, and I kind of had a wake-up call moment where I realized I was really not that important to my employer, and I needed to figure out a way for me to control the outcome of my life and how I earned income. So I got bit by the real estate bug, and then have been buying real estate in some aspect ever since.
Got it. Tell us about your first deal in real estate, how you found it, how you came about it, and what the business plan and strategy was.
The business plan and strategy was, does this stuff work? And I was like, well, I'm going to buy a rental property and just see if I can actually get somebody to pay me for owning a piece of property. And I live in Little Rock, Arkansas, and so it's a very low cost market. So, and this was the year 2015. So the market was at a good place. And I was able to buy a 3-bedroom, 1-bath property for $30,000. It needed $10,000 worth of rehab to get it back into rentable condition, and I was able to refinance that. The value at the time was $55,000, so I pulled about $44,000 back out. Was able to pay back my initial private lender, pay back the money I put into it to fix it up, and was cash flowing about $100 a month after you factor in all the expenses and allocations and everything. And that didn't really change my life, but it changed my outlook on life, because the $100 didn't really change my current financial situation that much, but it was a proof of concept that if I could keep doing this at scale, I could buy a lot of properties and just recycle the same money over and over again.
Yeah, and I was reading your bio, and you're passively investing into over 1,000 units, and you've got around 100 of your own properties under management. Is that correct?
That's correct.
How did you get into, because even knowing that there's passive investing opportunities out there, that takes kind of getting into the weeds and finding that out on your own. How did that come about?
Well, I started off using my IRA to lend to other investors. Sometimes people need a down payment help to buy some properties, and I used my IRA to lend. I didn't have but $70,000 in my IRA at the time or something. So I would lend, a few $1,000, $10,000, $20,000, $30,000 out of it at a time, and it'd be a short-term 6-month to 1-year loan. But then I would get my principal back and plus interest. And I thought, well, okay, that's a really cool way to make money, because I'm not really involved in the deal. I'm just a lender on the deal, and that over time evolved to me figuring out how to pool capital together and run a company that actually lends to real estate investors. And so now I'm a small capital arm of my company or my business that lends to real estate investors.
That's very cool. And even getting into that niche, how would you find people that need money for their down payments that you could lend on? Is it just getting into networks?
Yeah, getting into networks. finding real estate investors who need to borrow money isn't that hard. That is, there's a lot of people that are looking to buy properties, they don't have money to buy the property. So it's finding those people and then setting up the underwriting process to figure out if that's a good deal for you as a lender is probably the bigger challenge. So to find people who want to borrow, I worked my local network. I would go to the local RIA, join masterminds, get into Facebook groups, and it's not that hard to find people who are looking for sources of capital.
Yeah, and like you said, underwriting the deal to make sure there's even a deal there, and then make sure you don't lose your principal, because that's the number one rule for sure. And then the integrity of the person who's needing the money to be lent, character, and so on and so forth. Is that something that you're still doing?
Oh yeah. I have a fund now that I raise capital for. That's a
506B maybe?
Yeah, thank
506C?
Reg D 506C, so I can regularly, openly raise capital for it. And that particular fund is set up to pay capital investors a 12% preferred return. And so what we're doing with the capital is we're turning around and lending that to real estate investors, short-term, pretty high interest rates, but they need money for 3 to 6 months to flip some property or to do a transactional loan, that sort of thing.
Yeah, if you're giving a 12 pref to your investors, you need to, I mean, your alpha needs to be much higher than that for it to even make sense for you all. But at the same time, you got to have one to have the other. So if they need money short term to get to make a flip, then it's a win-win for everybody. As long as they're underwriting it on their end, say they buy it for $20,000, put $20,000 into it, sell it for $150, whatever. Underwriting your all's portion, and then the rehab, the principal, then it works. It's just making sure that everyone, the slivers of the pies, all work out for the property. Tell us about some learning lessons along the way that you've had from buying your first property to where you're at now, and then we'll get into where you're at now too.
Sure. So there's definitely some principles that I learned along the way, and one of those is that it makes sense to experiment and do proofs of concept to figure out which thing works for you and your personality. But once you find one that works in the current market cycle and is appropriate for your skill set and your personality and your time and effort, pick that thing and find that nail that you can hammer and just keep hammering that nail. And the real wealth comes from doing something simple really well at scale versus doing a little bit of lease option, do a little bit of lending, do a little bit of a multifamily, do a little bit of single family. I got to that shiny object syndrome at first, and I've done a little bit of everything, and I did a lot of it not that well until I figured out a couple things that look at that.
Yeah, where focus goes, energy flows. You go a mile deep instead of a mile wide, and I had the same exact issue here: shiny object syndrome. Is it self storage? Is it flex warehouse space? Multifamily, single family? But once we really started focusing in on where we're heading, now it's really cool what can happen in a short period of time when you give true focus to what you want to get into. How did you find out exactly where you wanted to go with real estate? Was it writing it down, getting some clarification? How did you find?
Good question. It was trying out a lot of things and figuring out what I didn't do well. And one of the things I realized what I didn't do well was the physical management of property and dealing with leases and tenants and all that sort of thing. It turns out I'm not an operations guy. That's just not my strength. I'm really good at learning information. I'm very good at doing underwriting and evaluating deals. I'm really good at talking to people raising capital and understanding fundamental business practices. But to actually be the integrator or operator of a company is contrary to my personality. And so that's kind of the thing I realized is that, okay, I'm a visionary. I like big ideas and I like to talk about big ideas. But when it comes to actually executing them, I need an integrator. I need an operator to do that for me.
Yeah, and that's a whole another business structure, the visionary and then the integrator. And once you have both, that's EOS is a great system to operate off of. We had the same. I've always been an operator on my end as far as building companies and bringing people in. But when you get into the unknown, like a new industry, like property management, I mean, you don't know the next 5 moves, so you can bring in professional property management. And what we did was essentially just mimic them with our own system. We opened up a Buildium subscription and then uploaded the rent roll and just started just mimicking the financials. And I think it was maybe a year and a half later, we were able to take over not only that property but a few others. But it helped getting the kind of mimicking the process, what they were doing, and just take it from there.
It helps to see what good looks like, so you can copy it, right? Versus just building it off from scratch yourself. It's very difficult.
Yeah, and that's just basic mentorship. If you have somebody there that's showing you the next move, next steps, there's no sense in guessing. Someone else has already done it, proven that it can be done. So just take the good, learn from their bad, and make it better, and go from there. And now you've morphed in your career with real estate. And I say morph because you started out with single family. That turned out to be successful. And then what happened? You got into some lending. What happened next? Because now you're raising capital. Now you're in over 1,000 units passively and 100 units collectively. So tell us about the gap there.
Yeah, I wanted to get into multifamily and commercial projects, but at first I was a little intimidated by the size and scope of these projects. It's just not something I could figure out how to take down an 80-unit apartment complex by myself. And so I kind of realized along the way that in order to do those kind of projects, it becomes a team sport. And so I have partners in almost every business venture I go into now, and I've been a member of a lot of masterminds, and I was kind of looking for that next kind of big scale opportunity. And I found some folks that were in the multifamily space, and they were existing operators, and they were done it a while, and they needed to help raise capital, and I'd been working on building a list of people that kind of followed my trajectory. And so I thought, well, could I join forces with you guys on one of these projects and be a limited partner and put a little bit of cash in, but then also have a piece of the GP stake if I carry some of the load, do some of the reports, be the investor relations person, and then bring some other friends along that might want to invest. And that's how I got into my first deal. Was I was kind of like this in one seat, a minority stakeholder in the GP general partner stake, and then I had a little bit of cash into it from a limited partner point of view. So I got the exposure to what it's like to be on both sides of a syndication, and I saw that structure and I understood how syndications work, and I thought, this is the business for me. Like, this is what I want to do. This is how I can take down and be a part of this much larger projects without having to be in the operations.
Yeah, that's great. So you got into the right rooms. Well, might not have even gotten into the right rooms, but you got into a lot of rooms and found the right room to be in. And you compounded down on learning and identifying exactly what your passion was. And there's a lot of different career paths you can take in real estate. I mean, even like you had said, underwriting, analyzing, the finance side, the property management side, the asset management. But you've chose capital raising, and that's building relationships. That's connecting people to the deals that you're able to underwrite based off of experience and knowledge and education. Tell us a little bit about what that looks like on your end, and how you go about to find people interested in investing.
So when you're looking to raise capital, I just believe in this idea that you want to dig your well before you're thirsty. It's not fun to get a big commercial project under contract and then suddenly you have to raise $3, $5, $10 million and you don't know where it's going to come from. Like, you need to create those relationships well ahead of needing to raise the capital. So what I do is I have this conversation a lot. I say, hey, nice to meet you, Josh. Like, we really haven't talked before. I'm into real estate. If I ever come across a deal and it's something that would make sense for you to make some money on it, would you be interested in hearing more about that? And most people say, well, yeah, what does that mean? And so they just kind of lean in. And so I'm talking about a past deal. I'm not specifically talking about a deal right now because I don't know if it's going to be something I can publicly talk about or not, because of some regulations. So I just say, hey, if I ever come across a deal, do you want to hear about it? And they're like, well, what does that mean? I was like, well, how about let's just set up a virtual coffee or a go to coffee, and I'll just talk about how these things work. I don't know how, I'm not raising for them right now, but if I ever do, I might know how I do it. And most people like that approach because it's just educational. It's just an opportunity before it's an opportunity. And when you have that conversation enough times, you just kind of add to your list. And I have a newsletter and a podcast. I'm just kind of always putting out, good, helpful information for people who are curious or interested about getting a return on some of their capital without having to own the real estate themselves.
Yeah, that's huge. And then you educate them on the process and what they can expect as far as returns, when the returns can be distributed, so on and so forth. And
Yep.
what do you look for? So you're out there, you're vetting deals, you're in groups that have deals coming about. So you're in the same rooms as other operators,
Right.
and the operators could be vertically integrated, where they're doing the renovations, the management, and asset management, everything combined, or they could just be the GP that relies on third party. What are you looking for in the GP team, and then what are you looking for with the experience?
Well, you meet people, and there's just kind of people that make the back of your hair stand on end. Like, you just give me a weird vibe. That's like the first sniff test. Like, do I want to talk to you again? I think
Yeah.
is a big part of it. That's very subjective, and a little more objective is how much what experience you have, how many deals have you gone full cycle on, and how did you survive the 2008 crisis? Well, I wasn't in the 2008 crisis. Okay, well, that's not necessarily a non-starter, but you haven't been in the business that long. So, what are you going to do when there's a similar challenge? How did you survive? The pandemic, that kind of thing. I just want to hear how people survive mistakes or just kind of black swan events, and if they have some experience in dealing with those things, it makes me feel a lot more comfortable, because there's going to be another black swan event that we can't predict, probably in the next 5 or 6 years, and we don't know what it's going to be. And so I want a sponsor to have some ability to weather those kind of challenges that they face sometimes.
Yeah. I like looking at the deal. Show me the deal, and then a good deal can go really bad with the wrong operator,
Yeah.
and it could be just a killer deal, and then you just got the wrong business plan, wrong experience, everything. Or you could have, if you see the underwriting and it's a Class C property, and they're buying it based on pro forma, and then their reversion cap rate is, say, in the fives on Class C.
That doesn't work.
Well, and it's never going to work. Anything 5 cap is reserved, in my opinion, for Dollar General, Dollar Tree. It's something that's absolute triple net. It doesn't have the turnover, the ups and downs of multifamily. That multifamily is going to have turnover. It's going to have bad debt. It's going to have burn off. You can't trade at a 5 cap and expect to make a return. It just doesn't work. The industry doesn't work. Unless you've got true economies of scale to where you're underwriting at a 10% vacancy, and after that it's still a 5. Underwrite it to kill it in a sense, but
there might be a few unicorns that have some special like tax abatements or something, so that their operating expenses are really low. But these are the exceptions, not the rule.
Yeah, and there was a lot of those deals, buying based on pro forma, and man, it just never. I say thank God I didn't get caught up in FOMO, but in all reality, I didn't, because I just refused to partake. Partake and even put an offer in on something that's unrealistic. So I think that, and I say that because I think that you've seen the same thing in your underwriting for your investors, and you're not going to let them go into something that, with your experience, would make no sense for you to buy it either.
Exactly. Yeah. And so you're betting on the operator, and then you're betting on the deal. And I want to have world-class upside on both scenarios. I'm very quick to say no, and it's got to be a hell yes, or it's just this is just not a good deal for me right now, because there's just too many deals to go through. I can't buy everything. I don't want to buy everything.
And that's capacity, because you've got to have buying. It's great, but then the real work starts after you close, and then it's game on. The business plan starts getting executed. You've got to have operations just top notch. The team and everything. Very cool. Tell us about the 5 pillars of wealth. You've created this program to help with your experience to help others.
So the 5 pillars of wealth are that every deal or business or opportunity that exists for you to create wealth needs one of or all 5 of these things. So it's time, money, network, knowledge, and a value creation opportunity. So what I mean by a value creation opportunity is a deal where you're buying it actually at a discount, not at a discount. A deal where you fundamentally know that you're buying it for cash flow on day one, and you have the potential for creating upside in first appreciation. So that's a value creation opportunity. In a business setting, that's buying something at some sort of multiple, and that's bad management, and you feel confident you can step in and improve the management and turn the business around, right? That's a value creation vehicle. But in order to actually exercise and create that wealth by creating the value, you need somebody's time and energy and focus to work on it. It doesn't have to be yours, but somebody's got to go into it. So, like, who's going to spend the time to do all the things that I don't want to do, right? And then, like, who is in your network? Who are you going to raise the capital from? Lenders, private money, your own cash? Everybody, we need to like use all 5 aspects of wealth creation in order to create it. So you use your network and knowledge to piece together the puzzle pieces that you need to buy this value creation vehicle, a multifamily project. And every single deal has to solve for all 5 of these every single time. And a lot of people kind of misunderstand that, oh, I can't buy that project because I don't have the money. Well, like, you don't have to have the money. You need to find the people who have the money that they will get value out of being involved in that deal. And that's how you create value and wealth, is by taking what you need to get what you want to get what you need, which seems crazy, but we do that every time when we buy a house with a mortgage. Like, I'm going to buy this property, but I don't have the money for it. But the fact that I want it, they'll give me a mortgage for it. And then I get what I want, which is the money to buy it, which is a trippy idea to think about, but that's how these deals work.
That's great, and that's living by the principles too. Because if it doesn't check all the boxes, it doesn't work. Move on to the next.
Right.
That's really good discipline to explore. That's good. What is your all's buy box? What areas what are you looking for, and what geographical area?
So I'm typically not too bound by geography. We do operate in the U.S., and I typically like the Sun Belt states. I want to buy into a rising tide scenario. I want to be in the path of progress. So I'm not trying to be avant-garde and find a diamond in the rough in Detroit or some other declining market. That's just not interesting to me. I have to be too good to win in that scenario. So what I prefer to do is find a sponsor who is very good in a geographic region like North Carolina or Texas or Georgia, Florida, where there's favorable market conditions. The jurisdiction there is favorable to landlords, and they're just a business-friendly state. I really like those. And then that's kind of the macroeconomic. And then I want to find a kind of a sub-market area where there's the growing population, has a diverse mix of job sources, and that there are lots of new jobs being created all the time. So there's job growth, there's population growth, and there's a diversity of jobs. Because your rent in any given scenario is determined by the incomes of the people in the area. So I want an area that has good incomes. And so that's the sub-market that's kind of supporting the business model. And then I want to meet up with some sponsor that has found a really good deal. They put together a business model, and they have a very clear plan on how they can create value in the scenario. It was bad management before, they're buying at a discount, they've found some sort of tax abatement, they've found some sort of kind of angle that it'd be hard to lose unless they're just really bad at management, and then I know these guys are good at management. And that's something I want to buy into. It's very easy to raise money and be a partner in a deal like that, where I'm putting in some of my money many times, I'm putting in friends' money many times, and I want to reduce risk as much as possible and catch that wave of the rising tide.
Yeah, that's huge. And the tax abatement piece, there are syndicators, general partners that are working with local cities and converting a percentage of the properties over to a LIHTC program, and that's a great hedge. Property taxes are one of the largest, if not the largest, expense on a property. That's uncontrollable.
Especially in Texas.
Yeah, well, and everywhere is right now. There's every properties in every part of the U.S. is going up. So it's
values are going up, right? So accordingly, then so are taxes, right?
Well, and that's like values are going up, rents going up, but now you've got a new tax bill, new basis, and now you've got to increase your rents again. And it's just it's a chasing the tail kind of scenario, in my opinion, because
Yep.
you still have to maintain balance.
You got to maintain
Insurance
margins.
costs,
Yeah.
insurance costs are a huge problem as well. Like you've seen, especially in Texas, for sure.
Florida's really bad, so I'm really careful about Florida right now.
Yeah, there's a lot of talk as far as just going in and creating your own insurance plan on the properties,
Right.
captive insurance, and just trying to hedge the cost. But what's the future look like for your business? How far you want to take it with assets under management?
Yeah, so I'm very interested in growing our fund. We're actively raising capital for it, and then we're always looking for deals in the ownership side of the business. And so the goals there are more about like finding the kind of Warren Buffett has this idea of like, you have 20 punch cards and you only have 20 deals you can invest in. And I'm just very carefully picking those 20 deals versus trying to grow an ego number. I think a lot of people get caught up in, I have this many doors, I have this many assets under management, I have this much cash flow. My financial needs are fundamentally met at this point. I'm just building wealth for the next generation in my life. And so I'm just very careful, and I'm playing more of a wealth preservation play than I am a wealth growth play when it comes to owning real estate these days.
Yeah, you just hit the mark on the head too. Is not get a part of FOMO is how many units do you have? How many, and knowing you just need more units. Well, that's not the answer at all. Cash flow solves all. So
Right.
if you own less but you have more cash flow, you're meeting your goal versus more units, more headaches, less cash flow. And,
yeah. Would you rather have 100 units that are leveraged at 80% on the value, or 10 units that are free and clear?
Right.
And they both have the same cash flow, right? Well, a 10 units free and clear is so much easier. And so then you get to the argument of, are you in the growth phase or are you in the wealth preservation phase? I think a lot of people argue past each other, not realizing that their time horizons are have a different focus.
Yeah, and that's another point too. Is how much runway do you have left that you want to get to the end of, and then just engineer your plan backwards.
Yeah.
You don't have to have 10,000 units and own maybe 100, because that's what it fractions down to of your actual ownership to be happy. So very cool. If somebody wants to reach out, learn more about you, possibly invest alongside of you, how can they get a hold of you?
Probably the best place to find me is on LinkedIn. I'm very active out there, and I look at all my messages that I get on LinkedIn, so you can find me there at Paul David Thompson. And I'm also Paul David Thompson at pretty much any place on the interwebs, Instagram, YouTube, whatever. I'm out there under Paul David Thompson.
Awesome. Very cool. Paul, we definitely appreciate your time today. I look forward to following you, and we will certainly talk soon.